Such as when we are talking of books of original entry, they are also referred to as journals. They are also referred to as day books. So we say that there are 5 types of books of original entry. And we said this is the first book whereby we enter the source document. In our previous class, we tackled the source document, in which we said that source documents are evidence. Source documents are just an evidence and a supporting document which shows that a transaction has occurred. So, in the journals, we say that we have 5 types of journals. We have what we call sales journal. Sales journal is used to record all the sales invoice. Sales invoice is a source document. We have what we call purchase journal. Purchase journal is a notebook or is a book which records all the purchase invoices. We have what we call return inward journal. This is a book which records all the returns from customer. So it records what we call credit notes. The document that it is recorded here is what we call credit notes. Then we have returns outward. Return outward is whereby we are returning to the suppliers. So it records debit notes, and the last book we dealt with is what we call cash book. Cash book is also a book of original entry which records the receipts. And remember, a receipt can be of payment or of receiving the money. So, after the books of original entries, we shall go to what we refer to the ledgers. Books of original entry, it records, if it is sales journal, it records all the letters. This records all the letters. Purchase journal, it records all the creditors. That's what I said. Returns inward journal, it records all the customers' return. Returns outward journal, it records creditors' return. Then the cash book, it records what we call receipts, and receipts can be either for payment or for receiving a money. Those are the books of original entry that we have discussed. Ensure you can be in a position to illustrate them and also to post. Journal entries and also to post what we call the source document to the journals. Now, when we are talking about ledgers, basically we have 3 types of ledgers. We have what we call sales ledger. Sales ledger is one of the accounts which records all the accounts of customers. A ledger is an account which contains individual accounts. As I said there, it is used to record individual accounts of customers or debtors, or individual debtors account. So, sales ledger, we always use it to record individual debtors account. For example, in the sales journal, it contains all the debtors. But in the sales ledger, you find that we have individual. If it's Moses, kuna account ya Moses, kuna account ya Musa, kuna account ya Manuel, you find that individual debtors, their accounts are contained in the sales ledger. Then we have what we call purchase ledger. Purchase ledger, it is used to record individual creditors or suppliers. So that means it contains creditors account. It contains individual creditors account. Then we have a general ledger, a general ledger. General ledger, it is a book or it is an account that is used to record other accounts, a part of debtor and a part of customer. These are accounts like sales account, purchase account, returns in one account, and returns outward account. So class, get the difference. We have books of original entry, which records all the customers, if it's sales ledger, all the creditors, if it is the purchase journal. Then we have ledgers, they record individual accounts. So I want us to do an example, which we shall see how to record some document to the journal and also how to record the information from the journal to the ledgers. Information from the journal to the ledgers. So class, here is an example of a question that was extracted from MBC Limited. And the question says that MBC Limited provide the following information for the month of March 2011. So the information was on 2011 March there was a credit sale of Musau to Musau. So in Manisha, Musau is a debtor. Anauziwa. The same month, tarehe there was a credit sale to John. John anauziwa. So John is a debtor because we have sold to him. Also, there was credit purchase fraud. We have purchased from Mutua. So this is a credit. This is a supplier, creditor. Return from Musau. This is a customer return because Musau we had sold him earlier. So this is a customer return. A customer whom we had sold earlier has returned. Then we have what we call credit purchase. This is a creditor. Return from John. John was a debtor, so this is a customer return. We have return to Mutua. So in Manisha, Mutua was a creditor. This is returns outward. Paid John. This is a cash receipt. This is a receipt. Received money from Musau. This is also. This is a payment we made. Payment, not receipt. Sorry, class. Then on 13 we received money. This is a receipt. That's how you analyze question. Then the examiner is saying that record the above information to the journals and to the relevant ledger account. So the examiner wants us to record all this information to the relevant journal and also to the relevant ledger account. So now the question is, which journal or which account are we preparing? Which journal or which account are we preparing? Because the examiner said, record the above information to the journals and to the relevant ledger account. So, I've said that we have 5 key major journals and we have 3 ledgers. We have source journal, which records all the debtors. We have what we call purchase journal, which records all the purchase invoice. That's the creditors. We have returns inward, which records customers' return, returns inward from customers. We have purchase return, which records what returns outward. We have also the last thing, which we have cash book, which record receipt or payment. Then for the ledgers, to brief is that we have sales ledger, which records individual. Maanisha, we are going to open individual accounts of the debtors in the sales ledger. We open individual account of creditors in the purchase ledger, and then we open account of sales account, purchase account, returns in one account, and returns outward account in the general ledger. So follow. Let's do it, and you follow. Sure, you follow. So class, the question says that we want to enter that information into the journals and also to enter it to the ledgers. So I will start with the journals, and this is the format of the journals. As you can see in the blackboard. Journal is just a book, as they are called, is just a book or a page, but it has those columns as shown in the ledger. So in a journal, you have to show a column of a date. This is when a transaction occurred. You have to show the details. These are the particulars. These are the contents of the information. Then folio is the page, or when it can refer to. Then the amount. This is the amount. So day one, we were taught that day one, it was 2011 March, tarehe moja, credit sales. So credit sales to Musau. So Musau is a debtor. This one I've said will record debtors. Musau was a debtor. So Musau, it is invoice number 1. It might be the invoice number 1 of that month. So tulimuzia shillings 200. That was Musau. He was the first customer to the museum. Then the other date is date. It was tarehe mbili. We made also another set. To John. John, we can call it invoice 2. John tulimuzia what amounting to 400. Then on the other date, it was a credit purchase. Credit purchase from Mutua. So credit purchase is a creditor. Creditors, we record them to the purchase journal. So it was 2011 March. It was date for tumeuzia Mutua. Mutua might be in the invoice number. We can also use the ledger. It's found in the purchase ledger. And we have sold him amounting to 350. You can also, instead of using invoice, you can say that if you want to get Musau, you can get him to the sales ledger. If you want to get John, you can get them to the sales ledger. Because sales ledger is where you are recording individual accounts of the debtors, individual accounts of the creditors. So Mutua is found in the purchase ledger at Tulimuzia 350. The other date is date. It is date number 5. Return from Musau. So nimekwambia those are returns inward, customers return, and we record them in the return inward. In a record customers return. So it was late. It was 2011 March tarehe 5 Musau has returned. So Musau amerudisha, they are on the sales ledger. Musau amerudisha gold costing 50. Then date number 6 is credit purchase from Jackson. Tarehe 6 tumeuzia Jack, it's in the purchase ledger, and we have sold him gold worthy 600. We have sold him gold worthy 600. So as you can see, Jackson, because ametuzia is a supplier, we are recording in the purchase journal. We are recording in the purchase journal. Then on the other date, inasema, the other date is saying we are on the other date of the month. So the other date of the month was tarehe 9, return from John of 150. Return from John. John was a debtor. So tunamrecord kwa debtor tarehe 9 John amerudisha. John is in the source ledger, amerudisha was worthy 150. Was worthy 150. That's a customer return. Customer return. Customer return are recorded in the returns inward. Customer return are recorded in the returns inward journal. Then tarehe 10 there was return to Musau. Return to Mutua. Mutua was a creditor. So returns outward, this is where they got returns to supplier. Return to supplier. We record them in the returns outward journal. So it is 2011. We have the column of date, details. Nakwambia they are details, all particulars. Folio, the page number, and also the amount. So we are talking of date 2011 March. Date 10 Mutua returned. So it is Mutua. Mutua is found on the purchase ledger and as returns gold worthy 120. Return to Mutua. Tumemrudishia. Mutua alikuwa ametuzia. Mutua is a supplier. Get that? Mutua is a supplier. So we are returning to the in. We are returning to the supplier. So they are returns outward. From business to out. When they are coming in, they are returns inward. That means that a customer is returning. But when we are taking them out, it is returns outward. And we are taking them to the suppliers. So, we return to the Mutua tulimrudishia. They were returns from 2. Then the other date was date 12. Paid Jackson, so that will go to cash book. Let me prepare a small cash book here. Cash book, as I said, it is the one which receives money. It is the one which receives money. Date, details, folio, cash or bank, date, details, folio, cash or bank. These are sample of cash book. Cash book has included, we can have 1 column cash book, we can have 2 column cash book, we can have 3 column cash book. 1 column, it is whereby we have only cash. 2 column is whereby we have cash and bank, because customer can pay on cash, others can pay on bank through a check. Also, we can make payment on cash or bank. So the debit side of cash book is the receipt. This credit side is payment. I'm saying the debit side of a cash book is receipt and the credit side of a cash book is payment. So I've drawn a 2 column because we have cash and bank. A customer can pay cash, a customer can pay bank. We can pay supplier on cash and we can pay supplier on bank. So tarehe 12 we paid Jack shilling 50. Jack, out of our illustration there on the purchase journal, if you can look at the purchase journal, Jack was among the people whom we purchased from. So inamaanisha it is that we are paying. So if we are paying, money is going out. We pay to the suppliers, customers pay to us. Get the 2 scenarios. So when we are paying, we can pay to the supplier. We can pay an expense. When we are receiving, we can receive from debtors and also we can receive incomes. So this scenario, tutaambiwa we paid a supplier. So tarehe 12 it is March 2011. March tarehe 12 we paid somebody by name Jack out of a purchase ledger and we paid by cash shillings 50. That's how you record. Dig in there, dig in there, dig in there. Then tarehe 13th we received money from Musao, 20 shillings. So now a customer has paid. The previous example, we paid a supplier. Now we are receiving money. So on date 2011, March 13, Musao, who is in the sales ledger, ametulipa 20 shilling. So we record a receipt. Then the previous one will record a payment. Here, cash book is one of the journal which records receipts or payments. Receipt can be of payment, receipt can be of cash in. Therefore, those are the journals. We have what we call the sales journal. Sales journal, as you can see, it has recorded all the debtors. We have what we call the sales journal, which has recorded all the debtors. It has date, it has details, it has folio, it has an account. We have purchase journal, which has recorded all the creditors. We have what we call returns inward journal, which records customer return. We have what we call purchase returns outward journal, which records returns to suppliers. Then we have cash book, which records now the payment or the receipts. So class, now these are the ledgers. as you have seen how we have prepared them. We have said we have three key main ledgers. We have sales ledger, which records individual debtors. We have what we call purchase ledger, which records individual creditors. Then we have general ledger, which records sales account, purchase account, and returns outward account. So as we have done, now the people who were in the sales journal, we have opened tumefungua account ya Musau, tumefungua account ya John. So we have two people who were debtors. We have Musau and we have John. So Musau tulimuzia debtors have a debit balance. This is here. This is here. All the accounts, remember the double entry. This is here. This here. So Musau tulimuzia tarehe 30th. We made ourselves of 200. Then Musau returned some goods, tarehe in terms of 50. The same Musau, he paid on date 13th. So I'm talking about the sales ledger. Nimesema ina record individual debtors. So Musau is a debtor. Musau purchased. So on debtors we debit. Then we have what we call John. John purchased, John returned. We have what we call on the other side, we have what we call purchase journal, purchase ledger, which records the individual creditors. So creditors are credited. So tarehe Mutua tulipurchase from Mutua 350. So once they return, we debit in order to reduce his amount. The same applies to Jack. Jack, we sold to him good worth 600. Then he paid some amount. Then once we go to the general ledger, now we record the ledger, we record source ledger. Source ledger, we have a credit, we have debit. We record purchase ledger, which we have a credit and debit. Here credit, debit, credit, debit, credit. So if you can see, is that now we have the source ledger. It may contain all the debtors. That is Musau. Musau, remember the account must have date, details, and amount. After Musau, we have John. That's the record of John. Then we go to purchase ledger, where we have Mutua, record zake, and we have Jack. Those are the creditors we have. Then we have what we call general ledger. Nimesema in a record other account, a part of debtors and creditors. So we have sales ledger, we have purchase ledger, we have returns inward account in the general ledger, and we have what we call returns outward account. Now after that we end up by balancing the accounts. We start with Musau. Musau tulimuzia goods worth 200. Musau turned 50 na akalipa 50. So balance carried down will be of 200 minus 50 minus this will be of 130. Because remember the account must balance. So to balance at 200, to balance at 200. So now this balance carried down is now the data which will go to the balance sheet. That is Musau. Let's also balance the account of John. John tulimuzia 400, he returned 150. So balance yake, balance carried down ni 400 minus 150. 400 minus 150, which should be 400 minus 150, which should be 250. So that the account should balance at 400. The account should balance 400. Remember, the debit and the credit must balance. That is John. Then let's also balance Mutua. Let's also balance Mutua. Let's also balance Mutua. Mutua, we purchased from him 350 and then we returned 20. So balance carried down will be 350 minus 20 will be 320. So that the account can balance at 350. The account can balance at 350. Remember to put the double lines when you are closing the account, because the Manisha, the account is fully closed flat period. Then the other account is for Jackson. We have to close the account for Jackson. Jackson, we purchased from him 600 to Lumlipa 50 shillings. So balance carried down is 550. Ametundai shilingi 550. So that you can balance at 600. So that you can balance at 600. So the Manisha Ametundai 550. That's the amount that the supplier John owes us. Then let's go to the ledger, general ledger. We start with the sales account. This is, here we close this one. Balance carried down of 600 to balance at 600 to balance at 600. That is just ledger. You look at the side which has more, you balance the other side. We have also another account called purchase ledger in the same general journal. We have another account called purchase ledger. In the same general ledger, we have purchase account. Purchase account is always debited. So, to linunua hizi, we close balance carried down of 950. 950. 950. The balance is at 950. Then the other account is returns. They have the same general ledger. We have what we call returns. In one account, it is the opposite of sales account, so it is debited. Balance carried down. Balance carried down of 200. It is balanced at 200. It is balanced at 200. Then on the other side, returns out to what? Balance carried down of 120. To balance at 120. To balance at 120. So that's how you balance. Remember, at the end of every account, you have to balance the account. So class, ensure you understand the ledgers. We have sales ledger, which is for individual debtors. We have also what we call purchase ledger. We have also what we call purchase ledger for individual creditors. We have general ledger now for the other accounts. So that's how we prepare journals. That's how we prepare ledgers. So that marks the end of the class, and we shall meet next so that we can proceed now to the trial balance. Because I think you start from the source document, you go to the journals, you go to the ledgers, and you go to the trial balance. So trial balance is our next step, whereby we are going to take the balances now to the trial balance to see whether we have done proper journalization, we have done proper entries. Then from there we shall proceed now to the final statement, because that is where we shall prepare the balance sheet and the income statement. So class, let's meet next, and you need to invest for the exam. Thank you.